Hello everybody, it's Matt from Invexed Trade. I'm just going to show you a really quick lesson today on fibs, how you use fibs, what fibs you use. You're going to use S&P hourly forward chart, looking at trading view. So there's a couple of things we're going to look at. The first thing is I always look from the peak to the trough, what happened. So obviously everybody knows what happened in February down to March. We had a massive sell-off, bang, 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 bang. Market sold off. It was a shock to a lot of people, not us. We were kind of looking at this for months in advance, had the timing on it, but we are where we are now. We're going to try and help you out here. So this lesson is fibs. When we're looking at fibs, there's two fibs that we use. We look at a retracement of a move. So after a big move down, we're obviously going to retrace that move, go up. And we're also looking at an extension. So straight off the bounce, you get a bounce up, pull back, and off it goes. So to use that, I'm going to use the two fibs. First one, trading view, click on here. That's already set there. So I'll just show you a Fibonacci retracement tool. Put it at the low. Okay, put it back to the high. That's in the way there. We'll just move that down. So the high comes in here. Now, a lot of people refer to the golden ratio 61.8. And they say after a drop, the retracement getting at 61.8 and the risk reward is great, and fundamentally it's not. More often than not, it goes higher than that. Just going to move this so you can see those figures a little bit better. Generally, what I call the golden ratio, if I'm going to call it that, I'm looking at 76.4, so up here. But in a wave 2 or in Elliott wave, we're talking now, in a wave 2 pullback, it can go to 88%, can go to 90%. Again, whether this is an ABC, a B wave can easily go to 90%. So don't just always get in at 61.8%, because more often than not, that does not work. You'll see here, price came up. These people are clever. Went just over 61.8 and it sold down. So a lot of people thought, oh, great, the market's going down, came back up. And then people were like, yeah, again, second test, sell. And then look, price just goes up. So never rely just on that level. So the first one we're looking, right, if we are looking for a sell, we're not saying we are, but if we are looking for a sell on this chart, we would look between 76.4 and probably 90, okay? So we're probably, what I would do now is draw, even before price gets there, well in advance. You look for that band, you think, right, that's the region I'm looking for. It might stall, it might sell there, but generally it doesn't. The second bit is, right, so I'm measuring the retracement here. I'm now looking at an extension to come up, okay? So we're going to use the first pullback. So the first pullback off that low. Come back into these tools. And all this is explained on Invex. So there's a really good worksheet on fibs and how you use them for pretty accurate results. So I'm going to use trend-based fib extension tool. It's on most platforms. They've all got it. But effectively what we do is start at the low. Okay, so play 0 at the low. Come back up to the first peak before ABC down. Bang, come here. We then put that next tool down here, 0 there. And what it does, it gives you measures. So it's a couple of big levels here. You've got 61.8 as we've discussed, and 100% extension of that move. So you could put a green box here. Risk reward, yeah, you might get a little bit, but we want the better trades, the ones with lower risk, higher reward. We want to get in where the bigger boys are getting in. So you could have a green box here potentially. Okay, so what we're looking at now, all of a sudden, this big green box, which I don't like, you're talking 3,250, to 3,100, 150 point gap range, sorry, on S&P is no good. So now we start, we start bringing this box down. So we're probably thinking, well, actually, this is a better area, okay? 161 extension. This is probably, if you were a seller, that's probably where you're looking at getting in. Now, what I do is just one other tool. We're not even looking at indicators at the moment. We want to look at, if I go left, we want to look at previous supports. So what I could do is I start raising that box. Actually, it's slightly above it, but we'll move it to effectively the previous supports, where price was coming up. And what we're looking at now is that was really, we got support, up, support, up, support, up, support, bang. Up we go. We had a bit of a bounce here on the way up, but obviously not anywhere near strong enough to prevent that from happening. So now all of a sudden, using the retracement fib, the extension fib, the green box is previous support zone, you bring the box across and then you'll see what happened. It got to 3234. You know, this is zoomed out. You zoom in and make it more accurate. This is just demonstration. So got to that level, and then we dropped. Nice big drop. Nice big drop. So let's have a look at where we're looking. I'm just going to look at a price range. So we're talking, we've come from here to here. You had a 295 point drop on the S&P. What you want to be doing is looking at entry in this green box. So again, you want to be looking really as high as in that support box as you can. You'd probably got in at 3,220. Stop loss of 3,250. So you'll have a stop loss of 30 pips, and you would have gained 295. That is roughly 10 to 1 trade. I mean, it's beautiful. What happened there is price slashed through the moving average. This is 200 on the hourly 4 chart. Prices come back up. It's a bit of a battle zone at the moment, as you'll see. Came back down, gone back up, come back down. So at the moment, we're in a bit of a range. So this chart is now all about Fibonacci's. What we could do now, because obviously we want to have a look at what might be coming. We don't know that is a peak, but we're kind of thinking, right, we've had a V-shaped recovery. You know, that is nothing else. It's a V-shaped recovery. So we'll place it at the top, okay? We'll go to the bottom. So we're doing in reverse now. So then we're saying, right, here's a retracement. So 2 fibs you're going to use together, retracement, and then the extension. And then you're looking, again, this is all about risk-reward probability trading. It's not guaranteed. There's no guarantees in trading, but we're going from 50-50, whether it goes up or down, to we want 85-90. So I'll draw this now, come down, back to the pullback. Okay, now what I'm looking at here is a couple of interesting zones that I am looking at. I've got a 50% retrace, I've got a 1618 extension. So if this high holds, these are genuine targets we could be looking at. When that breaks, you can be looking at 2618, which ties in nicely with that. So there's a couple of levels which, if that breaks, and there's no guarantee at the moment we're in an uptrend until proven downtrend. But again, this is just looking at for potential entries. What I would look at is previous supports and resistance come across here. You know, this was clearly a battle zone because you had big support after big drop. 1, 2, 3. Probably a lot of people got in, bang up, come back down, try getting up, resistance. You know, we got resistance, sell off, up, support, support, up, support. It's not really come back down there since then. If that does break, and it's fairly strong. It's fairly strong support, I would suspect. You know, with those 2 extensions. To then carry on the uptrend. If it breaks, you've got, you know, a couple of, again, you could draw a green box here for Fibonacci, which is purely all we're looking at today is Fibonacci. That's all we're really trying to target today, using retracement and extension. If I put a box between these 2 areas, you'll then see that, yeah, this was actually loads of resistance, bang, dropped, resistance, support, 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 support. So can you see, just using the 2 tools for, or the 2 types of fib for probability trading, you can see that just those 2, we haven't even looked at trend lines or indicators, RSI. That doesn't mean you place a trade because you need to see what the price is doing at the time, but you can clearly see it works here. It minimizes the risk, increases the reward. It's much better using 2 together. Then that just gives you areas. Now, what I would be doing, you know, and you can find these on the Invexa, the cheat sheets, which will help you. But what I'd be looking to do when it gets to these levels, I want to see how RSI is behaving. I want to see how Awesome Oscillator is behaving. I want to see what the moving averages are doing. But again, this is purely Fibonacci, just to show you the 2 techniques that we can use, and they do work. Lots of funny people using strange techniques on Fib. But this is easy, very, very clear, very, very simple. You can see clearly in this example, it would have given you a nearly 300 pip move on S&P for 30 pip stop loss. So 10 to 1, you don't get much better than that. So use it, see how you get on. Visit Invexa. Obviously, like this. If you like the contents of the video, don't forget to subscribe and share. And try and help us to grow so we can obviously get as much of this information out to people that need it. Okay, thanks for your time.